All right, what is going on, everyone? Welcome back to the channel. My name is Gerardo. I'm the creator of LookIntoHex.com. We're going to be talking about HEX in this video. More specifically, are we in a bull or a bear market with HEX and with crypto in general? So hit the subscribe button. We just crossed 13,000 subscribers here on YouTube. We're bringing it back to the old days of the on-topic, very specific topic videos. Right? Obviously, we're still gonna do the live streams, the long hour, 2 hour, just kind of riff sessions. But for the time being, I do want to bring it back to some of the more specific videos like this one you see before you here. So if you're asking yourself, are we in a bear? Are we in a bull market? There are a couple things to consider, right? Because are you just talking about HEX? Are you talking about Bitcoin, Ethereum, and the rest of crypto in general? Are they correlated? Are they decorrelated? There are a lot of things to unpack here. But what you see before you right now is the HEX price chart in its longest history, right? From December of 2019 all the way to where we are now, May of 2022. And the curves you see drawn here, the white one and the purple one, respectively, are the 21 period exponential moving average and the 20 period simple moving average. They attempt to represent your bull bear sentiment, right? They attempt to represent similar data. And again, that is whether the general sentiment is bullish or bearish. And I know it's a very, very simple analysis, but truly it is that simple. And I'll give an example of an asset where this has been quite useful and actually quite accurate. For example, the early days of Bitcoin, you see that price pretty much during this entire run from a few pennies all the way to pretty much $30, there was no, candle body close beneath this bull ribbon, so to speak. And then once we reached this bull ribbon and dipped into it with this nasty candle, just had a slight bounce, but at that point it was too late. The shorter term moving average, the white one, had crossed beneath the purple one. Price was beneath both, and at that point you're in a bearish scenario. And this whole kind of chunk right here was your bear market until price came back above. Again, we saw a cross of the white curve over purple. A retest of both of these, kind of consolidation on top of these moving averages, little rally, support, rally, support. So once you have this clear support on these moving averages in Bitcoin back in the day, it was rally time once again. Sometimes we dipped back into them, sometimes we had bear markets beneath them, but for the most part, this bull ribbon was very clear, are we in a bear or a bull market? As of late, in the past few years, it has been a little wacky in the sense that price goes above it, beneath it, uses it almost as this kind of like this oscillating baseline level during periods of time like these over here, 2019 when we had this bizarre bubble and then dip beneath it, resistance, dip beneath it, above it, but we didn't hold it as support, March to capitulation, and then it wasn't until May of 2020 where price came above this band and actually held support and then ran above, it ran up like insane, right? From 10,000 to pretty much $60,000+ per Bitcoin, but we didn't back test it like we had cleanly during 2017. So just backing up a little bit, if you see during 2017, price back tested this bull ribbon multiple times. So if your strategy was just buy at the ribbon, well, you pretty much would have been good until the peak, right? Until this here where you would have bought here, price dip, and you would have had to pretty much exit at break even here. But for the most part, you had like 1, 2, 3, 4, 5, 6, over 6 times where that was the strategy for this 2016 to 2017 bull run for BTC. And as of late, like I said, this bull ribbon has been acting as some sort of kind of oscillation baseline point. It's kind of a weird thing to call it, but it hasn't provided that clear insight like it did back in 2016, 2017. It's truly been years, right? I would argue it's truly been since 2018, late 2018, early 2019. It's been since then that this bull ribbon hasn't really been very useful, to be honest, with the exception of maybe here, summer of 2020, where we're like, okay, we're holding support, rally. But other than that, like I said, no back tests here during the 2021 rally. So the 2020, 2021 rally. So I don't know. What is the utility of a curve like this diminishing over time? Do you get diminishing returns on some of your moving averages too? I don't know. These are questions to ask. I don't have all the answers, but 5 minutes in, we've just talked about Bitcoin. Why? Well, I'm giving you guys context. And reason being is that was one asset where this bull ribbon provided some clear examples of, in the early days, it's a clear sentiment of, are we in a bull or are we in a bear? General trend. And as you see with HEX, during its first run, like with Bitcoin, right, we pretty much formed these moving averages because this asset was so young, and then we had a nice bubble. So here on HEX, we had a nice bubble, and the moving averages just formed for the first time. Then what happened? We had a mini bear market. Price dipped beneath these moving averages. Into them, beneath them, recovered above it, support, pump. Look at Bitcoin. Into them, beneath, recovered above, support, pump. So you see similarities, right? But simply put, price closed beneath these levels a few times beneath the ribbon back in 2020, and these were great buying opportunities. And then, like I mentioned on Bitcoin, once we saw the price of HEX go up into like the 2 penny region, then it came back down to hold support on this previous horizontal resistance. Not only was it horizontal support, it was at these levels, I remember it was actually diagonal support as well. And now looking back, it was 20-week moving average support. So that this was an insane number of confluence, which is when a bunch of indicators find support simultaneously. So you had a confluence of support, which this region over here was very, very obvious. And that's when I actually started making videos, was around April, like, yo, this is a very obvious rally that's about to happen. Actually started making them around here, right? Once we held this even higher horizontal level of support, but even then notice how it was also diagonal support and support on the key of the video, which is, or the topic of the video, which is the 20-week moving average. In this case, it was the 21-week exponential moving average. And then again, price rallied up to 56 cents, dipped, and then once we broke beneath it, the white curve crossed beneath the purple. We started closing full weekly candles beneath. And again, you could argue these were good buying opportunities. This kind of 10 to 20 cent region, in retrospect, could be a really good accumulation region, right? In retrospect. But what happened then? We came back up, tested the bull ribbon as resistance, got rejected, and just kind of kept testing, getting rejected, right? We got rejected by the purple curve, came here, got rejected by the white curve, came back down. And you could argue this whole region has been accumulation, similar to this sort of bear market, except this one has been longer, more extended, and actually less violent, right? It's only been about 80. This current bear trend from September to now has been characterized by a maximum of like an 82% dip, which is actually less than, for example, this 86% dip of 2020. So with all that said and done, we're 8 minutes into the video. We've talked about this bull ribbon, described the example with Bitcoin, and describing where we are now with it, on it with HEX. And look at where price is, right? Because these levels are currently sitting, right? The bull ribbon for HEX is currently sitting around 17 to 17.4 cents, but price is at about 18.4 cents. So what does that mean? It means price has once again gotten above the bull ribbon on HEX. I love to see that, because let's not get too ahead of ourselves actually, because notice back here, December of 2021, we got above it, right? We got above the bull ribbon, but we want to see another thing, which is the white curve, which is our shorter term moving average. It attempts to represent the same data, but it's slightly more short term. We want to see our white curve flip above purple, because that's when we know that, that's when we start seeing confluence. So for example, back here, this example I used, where we see price beneath, dip back above, and then it wasn't until white crossed above purple where we actually had our pump. Similar to over here, we don't really see the pump, the real pump start until white crosses above purple, and then we just ran up. And then the opposite happens, right? We get a dip. More often than not, we get a dip when white crosses beneath purple, and we start holding these as resistance. So currently, I like what I see, because the gap formed by these moving averages isn't that big. Like above here, the gap was pretty big. There was a lot of volatility here. The volatility has kind of decreased. So again, that gap is really small. This bull ribbon is sitting between 17 and 17.4 cents. So the gap is less than half a penny. My point is, it allows price to, you know, if it stays where it's at now, 18.3 cents, in my opinion, and is able to hold above this 17-cent level and just go, even just if sideways, right? Even if price just goes sideways for a while, which, you know, given the current state of things, price might want to get excited if there's certain announcements being made. But what I'm saying is, worst case scenario, if we go sideways and hold above these moving averages, I think that's actually a good scenario, because it tells me we're holding nice support above the moving averages, above potentially key horizontal levels, which I'll get to shortly. But not only that, right? Okay. Oh yeah, the other point. Sorry, kind of blanked out there. It's a little late. We want to see the white curve get above the purple curve, and once that happens, then man, I think it's go time. Yeah. So I wanted to touch on that. I didn't think it would take that long, to be honest. So this is the bull ribbon on the weekly time frame. I also wanted to show you guys on a 3-day time frame, because very, very similarly, when white crosses above purple, generally it's a good sign. And you could argue that on the weekly time frame it's more powerful, but you can look at these bull ribbons on any time frame you want. Truly, again, it is more powerful on the weekly. I'd actually agree with that. But on the 3-day, I do find it interesting that you see similar patterns. Just obviously these moving averages being faster moving means that you might get more false signals, if that makes sense, on these shorter term time frames, which is why people often say higher term time frames like weekly, monthly have more significance. But nonetheless, you see similar things where white being above purple is generally you're in a bull trend, and price being above both is bull trend, whereas the opposite is true for a bear trend. You see white go beneath purple, and you see price action beneath both moving averages. So again, ever since October, price was generally beneath both moving averages. White was generally beneath purple, with the exception of this little pulse sacrifice pump. And then, after all that was said and done, we ended up in pretty much the same spot. White beneath purple, resistance on these moving averages until recently, where price got squeezed between this moving average we'll get to in a second. It's the 600-day moving average, acting as nice support. Sort of a fractal to the Bitcoin 200-week moving average. But price was getting squeezed in these moving averages until it finally popped above. And again, look at this. Look at the concavity of these moving averages. It's curving that way. Very nice to see. White above purple, check. Price above both moving averages, check. Looks good. So similar to on the weekly time frame, when we looked at the bull ribbon saying we want to hold 17, 18 cents as support. Again, the lower time frames will give you more false signals. So this one says if we can hold 14 to 15 cents, we're generally good, which, I'd want to hold 16, because that would be like this horizontal level right here. We've already back tested it a little bit on this previous candle. So this previous 3-day candle with the wick, that 16-cent level. I would say weekly, probably a little more significant. You want to hold 17 cents, 17 to 17.3 cents. But then you can actually keep zooming out, and let's look at the 2-week, right? Then you're like, all right. The reason I brought this up is let's see what is the bull ribbon on the 2-week, which is roughly your 300-day moving average. Yes, I remember now. So the reason for this one, right, the bull ribbon on the 2-week, is because you can see the bottoming region for back in 2020. Right? Notice how we had our run, and then we had our wicks down here come to these moving averages. We had a pump, we came back down, we had candles come to the moving averages, and then we had our run. And very, very similar, pretty much the exact same idea, where when white crossed beneath purple, it was a bearish signal, and then price being beneath both moving averages is a bearish signal. But now we're coming back up into this gap, which sits between 17 to 22 cents. So that just tells me, all right, you have this region, 17 to 22 cents, where I'd like to see price hang out. I'd honestly like to see it get above both of these. But even if we just can hang out, like I said, sideways, I think that's a decent scenario. Sideways in a little 17 to 22 cent bull flag or something. But even more bullish would be obviously getting above this 22 cent level and start flirting with, higher levels. And then for the monthly, right, we can look at the bull ribbon on the monthly and see that we have these monthly candles, and we have the 20 month moving average, simple, and 21 exponential moving average barely formed starting in July. And then price has basically come back down to meet these levels with wicks. And these candles look very, very, very bullish, right? You have these bullish doji looking candles. I think they're technically bullish dojis. Pretty sure. I always get confused between bullish dojis and dragonflies. Roast me in the comments, go ahead. But these long wicks to the downside to these moving averages, I love to see. I love to see it. And one major reason is because if you look at Bitcoin, look at the monthly, and you see the first time it came down to test its monthly bull band or bull ribbon, right? First time it came back down to test it was after its first major dip. And then from there, it was an absolutely insane run up of about 200 to 300x. So can HEX do the same thing? I don't know, but Bitcoin did it. So if we were to find support here, look, we had a first long extended dip on HEX, and we're coming back down to test similar levels that Bitcoin tested back in its early days. And if HEX is outperforming, which it is, at twice the speed, which you can see at LookIntoHex.com/ROI, then you see that we are potentially in a scenario where, you know, whether this is a wave 5 on the macro, if you're an Elliott wave kind of guy, or if, again, you're just looking at moving averages, you could say, look, there's this nice fractal going on relative to Bitcoin. Maybe it's rally time. There are a whole bunch of things you can look at, but I think that's going to be it for this video. I don't want to make it too long, right? It's a really, really simple video. All we did was look at two different moving averages, the 20 EMA, right, 20 simple moving average, and the 21 exponential moving average on a bunch of different time frames. We looked at it on the 3-day, the weekly, the 2-week, and the monthly. You can do this at home. You just pull up TradingView and, you know, add some indicators here, add your moving averages, and you can do this yourself. Choose your favorite colors as well. So pretty simple analysis for this video, but I think it's simple. I think it's powerful. It pretty much says, look, we are above a key level, finally, right? We've been battling this bull ribbon forever, ever since October, pretty much ever since our all-time high and the start to our dip, right? We've been in a HEX bear market. In my opinion, this is what a HEX bear market is. We've been in one since September 19th when we hit 56.5 cents. That's my opinion. And this is what it looks like, characterized by dip, lower high, lower low, you know, lower high. And then we started forming this nice accumulation region, which, you know, the case could be made that this is starting to be, I mean, we have a W, guys. We have a W. We have price above the bull ribbon. You could argue this was, oh man, it almost hurts to say something, which is this was the bottom, but it doesn't hurt, but it's like, you don't want to be the guy that says that all the time. You want to be careful with that. But look at that. Interesting. March 14th. Because March 14th, 2020 was also a bottom, I believe. Around here. Anyways, yeah. This video's gotten quite long. Check it out yourself. Go to TradingView. Look at these moving averages. I like where we are. I think HEX is ready to keep going. Even if we can just go sideways from here, I think it's a great launch pad to run up. I think the fact that Pulse Chain launch is around the corner is amazing. That gives that fundamental extra little catalyst, that FOMO, for price to start having confluence. For the fundamentals to start having confluence with the technicals. That's always great to see. Any other updates? The LookIntoHex risk metric is also a live TradingView indicator. I tweeted about it on LookIntoHex. Check out LookIntoHex Twitter. That's pretty much it. The liquidity dashboard is being redesigned to be a little easier on the eyes, but that's another bullish indicator, right? We have $38 million bid side liquidity, which is much greater than the ask side liquidity currently, meaning there isn't that much HEX for sale, specifically about 130 million HEX for sale. And it gets more expensive as people buy it up, obviously. So that's the video for you. I appreciate you watching. Subscribe if you haven't already. Check out all the links in the description, LookIntoHex.com, the Telegram group, t.me/LookIntoHex. Follow me on Twitter, twitter.com/Gerardog, GERAWRDOG. Yeah, let's get to 15K subs. Are we back with the consistent videos? I sure hope so. But I guess if you stuck around till now, let's give you a little Easter egg, which I didn't really touch on and I said I would, is the 600-day moving average. Look at that. Now, the 600-day moving average would simply be the 200 period on a 3-day. Now, it looks something like this, right? The reason I find this very interesting is because Bitcoin had a similar characteristic bottoming moving average, which was the 200-week moving average for the longest time, to where a lot of people know that, look at this, 2015, bottom of the bear market at the 200-week moving average. Cool. And price is what? $200? Perfect time to buy. Ran up to 20,000. Dipped back down to where? Exactly the 200-week moving average at $3,000. And again, March 2020, look at the candles. Where do you think it went? Right to the 200-week moving average. So currently on Bitcoin, it's sitting at around 21.7K. Could price go there? Hell yeah, I can. Do I think it will? I have no clue. I don't really care personally. Why? Let's touch on this. I guess the video isn't over, right? I forgot I was going to touch on this, which is simply a correlations matrix of price action. Now, what in the world does this mean? You can find it on Crypto Watch, which is, it's spelled really weird. It's cryptowat.ch/correlations. But you can see that HEX is not very correlated at all with any of the major cryptos, right? If you look on a yearly, right? This is the yearly correlations matrix. You can see ETH, 81% correlated to BTC. You see these huge numbers, even illustrated by these bright green colors that you can see here, which is like 81%, 72, 82, these high percentage correlation values, above 30, 40, 50, 60%, right? High values. And then you get to HEX and look, how correlated is it to Bitcoin? 6%. To ETH, 14%. To BNB, 5%. Doge, 5%. SHIB, slightly negative. So they're closer to zero. It pretty much means they move independent of each other. Something that was interesting is that HEX is slightly correlated with Solana and Avalanche. And then you're like, what about the third greatest correlation? ADA, then ETH. So you're like, wait, that's weird. And then Matic. So the top 5 correlated assets to HEX are other layer 1s. Very bizarre. I don't know if you can, kind of think about why that's the case. I can't at the moment. Someone in the comments, if you can come up with a cool thesis, be my guest. But yeah, just all I see here are the facts that HEX isn't really correlated with Bitcoin at all. 6%. Kind of does its own thing. Now, on a 30-day time frame, obviously a little more correlated, 23%, 7-day different. So it depends on what time frame you're looking at. You can obviously generally cherry pick a time frame to where it's more correlated than not, and vice versa. But for the most part, the rolling past year correlations matrix for HEX has shown that, look, it's not really that correlated to most of crypto, the major cryptos, in my, Bitcoin and ETH. So when you look at something like what Bitcoin's doing, you're not necessarily worried, right? For HEX, it's kind of on its own timeline. Like it topped out in September, whereas Bitcoin had topped out in like April and then in November. So different timelines. Looks like HEX may have already found its bottom, maybe. Bitcoin may be on its way still to find it. Who knows, right? Back to what I was getting at was this 200-week moving average on Bitcoin. So the 200 period on a weekly, and on HEX we see 200 period on a 3-day, which really heavily reminds me of, what's 7/3? Roughly 2x. And it's like, oh, where have we seen HEX outperform BTC by 2x? Well, 2x the speed. And that's on our ROI from launch. So let's just get rid of everything else. Just leave HEX and BTC. And you can see that it's still outperforming. Historically, Bitcoin's ROI from launch, right? HEX is outperforming Bitcoin's historical ROI from launch before staking and after staking if you toggle on the HEX share ROI. So just interesting, right? Just interesting to see how these moving averages play out. Again, no guarantees. It's just fascinating to watch a 2.5-year-old asset develop and start forming structure and start forming these moving averages to where in retrospect you can see what which moving averages become these key moving averages over time that everyone looks at, like the 200-week moving average on Bitcoin. So it'll be interesting to see those develop over time on HEX. I found this channel quite interesting as well too. This 600-day moving average and 400-day. You see this kind of like dip into it, then bounce, then dip into it, and now we're trying to get above it. I like that we're above it. So I see a lot of bullish confluence right now, personally, that tells me we could be ready to absolutely explode. Do we have downside risk? Obviously, we always do. And I would argue maybe the 600-day moving average is our downside risk. Historically, so far, it has been for all of March and April. So currently, that's sitting at around 11.8 cents. Thank you for watching the video. Again, I'm a little rusty with the one take pre-recorded, so I may have rambled a little extra, but it also has been a while since I made a video for you guys, and I missed it. So there was a lot to say, and I'm sure I missed a ton, right? But this was your HEX specific. Are we in a bull? Are we in a bear market? My argument was my case is we've been in a bear market on HEX ever since September of 2021, and potentially we may have found a bottom recently in March. This may have been our accumulation region. We may be exiting a potential bottoming, but just accumulation region. And this could be the beginning of a new leg to the upside, which I would personally be very, very happy to see. No guarantees, obviously, though. Downside risk is always there. Crypto is very, very dangerous and volatile, so only invest what you are willing and can afford to lose. Never financial advice on this channel. Your generic disclaimer. Subscribe if you're new. Comment on all of the million call to actions, the dozen comment call to actions throughout this video. Appreciate you watching, and I'll catch you in the next one. Peace.